Welcome back everybody to my channel. Thank you very much for supporting me. The subscribers, we're going up. The likes, we're getting them. And the comments, they're coming through. So thank you. And as long as you keep doing that, then I'm able to create videos. And if you can, drop a comment below and let me know what you want to see. Okay, I don't want to just keep pumping out information out there and you getting lost, then this is getting lost in translation. So make sure you let me know below what it is you want to see. But for today's lesson, I'm going to be teaching you how to really identify tradable opportunities, what to look for, how to prepare for them, and how to execute them. And this can be applied to any strategy you're trading. It really doesn't matter. So what we're going to do is look at pound yen as an example. Now the first thing we want to do is identify the structure of this market. This is very simple. The market is clearly to the downside. We cannot dispute that. I don't care what anybody says. It's down. Okay, the market is down. We're making lower lows, lower highs, lower lows, lower highs. Now what we need to determine is of course the behavior of the market at this stage, because if we're looking for sells, then we need to make sure that any sell that we take, we give ourselves the highest probable opportunity of winning that trade. So for that reason, we can see here on the Forex time frame that we have a structural level low. We must mark that level in, simply because if we plan to sell the market, we don't want to be selling the market into these structural levels, because more often than not, we're going to have a reaction. So if we take our structural level low, we must also take our structural level high. In this instance, this is recent price action, and this is where the market created the lower high when it attempted to push down to make that lower low, and at this point it failed. So for that reason now we have our range. Now is this range an indication of a consolidation, or is this a range that you'll be saying to yourself, well now I can look for buys and sells? Not really. What this is telling us is that the market right now is not sure of the directional bias is planning to go. We see a depletion in bearish pressure, and clearly we see evidence of bulls stepping into the market. So how do we plan this trade? Well, in our heads we can say to ourselves, we have a downtrend, we have an area in the market where price is not able to make that lower low, and now we can start to say, well maybe this is an accumulation phase. And what does that mean? Well, it just simply means that we may be seeing or experiencing a reversal on this market. So what are we going to do? Well, we're going to wait patiently for price to break above close or break below close structure, and then look for tradable opportunities. So let's do that. So we continue just to allow the market to do what it's doing. At this stage in time, we have to be super patient. There's no point rushing into trades, because as I said, we marked this level up previously because we don't want to buy or sell into these levels, because more often than not we're going to get a reaction. Now are there ways to trade this? Absolutely, but I'm not going into understanding this right now. What we want to see is true directional bias. So we have it in our heads that this was a downtrend, the market is clearly failing to make a lower low, and we can see that bulls are stepping into the market. So what we just need to see now is a reaction of that. And here we go. We see price action breaking, closing above structure. Now a lot of you might say, well, you know what? I've just missed the best buying opportunity. Why couldn't I buy below here? Well, let me ask you something. When the price action was over here, before we played it out, we had this level drawn in. So if you bought it here, look what could have happened. You could have had a reaction. You potentially could have got stopped out. So what is different now? Because you've seen price go up? Well, we can't trade like that. We need to be systematic, and we need to make sure that when we trade or take trades, we're taking them with the highest probability. So you never need to be the first in. Allow the market to do what it has to do. So we have this breakout. Now we clearly know how market structure moves. If this is a push phase, we now need the market to exhaust. So let's allow for that to happen. Now at this stage, is this a retest of structure? Think about this one. This is a strong behavioral pattern, bullish behavioral pattern. Price is broken out of this consolidation, sideways moving market, accumulation phase, whatever you want to call it. Range, I don't care. Now, after that breakout, the behavior was immediately received with bullish pressure. So now what we can do is put an X on this and say to ourselves, well, hold on. It makes no sense why we had this impulse move up and all of a sudden the bulls have stepped into the market. So now we need to allow the market to play out again to just give us some more confirmation. So for that reason, let's allow the market to do what it's doing. Now we have more information. Okay, so this information now is indicating strong bearish pressure, expecting the next candle to be bearish, attempt to break back into structure, and now a failure to break back into structure with this strong wick rejection. So now we're bringing the puzzle together. Downtrend, depletion in bearish pressure, bullish breakout. Now we have price smashing back into structure and then attempting to break and failing. So what we can do is we can remove this information. We can draw our level now as our higher low or our retest. We can mark our structural level low, and we can now start to see a pattern here. The structure of the market is clearly identifying a reversal. So now when we look at this chart, we're waiting patiently for buying opportunities when they surface. So how do we find them? Well, we'll go down to our lower time frame, and what we're looking for here is a behavioral change. So at this moment in time, we know this is the breakout. We know that this is the first indication that the market is potentially making a higher low to then eventually make a higher high. But what we need now is this level to be confirmed so that we can look for those trading opportunities, because this is not yet confirmed. So we're waiting for price to come back, and we mark our level high as well so that we make sure that we have enough range when we take this trading opportunity. So again, we wait patiently for the market to breathe and do what it's doing. Now that the market structure has come back to this level, what we can now do is say to ourselves, this is a level where that was created. This is the level where the market is respecting. So how do we translate this data? Well, what we can do now is we can go down to our lower time frame, which is our 15-minute time frame, and we can now start to see what is happening over here. Now we have the market creating a level and respecting the level, but we don't want to buy this just yet. We want the market to come back to this level so that we can increase our range and find the best opportunity to take this trade at the strongest levels. So that's what we'll do. We'll just wait patiently for the market to do what it's doing. We can clearly see it starting to move sideways, which is not enough for us to take a trade. So what we want to see is how the market reacts once that bullish pressure steps into the markets. So we have our level high. We must mark this now because we don't want to buy into this. We would like to see price break in the structure and then looking for those tradable opportunities. So at this stage, we see the market has come back, but we do have a level we have to be careful of. So what we're going to wait for is for this structure to clearly identify that there's bullish pressure in the market. So once we have that breakout of this level, what we now need to allow the market to do again is create a level for us to trade. Once the market comes back, retest this level, then we can start to confirm very strong bullish pressure in the market. And now what we're looking for is for price to come back to this level to retest it, because now we have the behavioral change. We can see prices broken out of this level, and now we're just looking for that retest. Once the market comes back to this level and indicates bullish bearish pressure, and we can see that the bears are trying to push this market down and fading, that's when we can go in for the trading opportunity. We have a very nice candle close here with a wick rejection. We can place our stop loss below the structure level. This gives us assurance that if the market's going up, it has breathing room, but at the same time, we can also avoid being stopped out prematurely by having the stop loss placed in the wrong place, and then we can go for our trading opportunity. Now, how do we decide this? Well, do we say to ourselves, well, on this occasion, I'm going to go for a 1 to 3 because that's what I trade? Well, no, we know this is our higher level range, so we have to make sure that by time we either take profit or manage this trade, it's done before price action gets to this point. So for that reason, we'll go with an instant execution, and now all we're expecting the market to do is continue showing this bullish behavior. And as you can see here, we have this bullish behavior stepping into the market. We can now safely lock this trade into break even, because all we're expecting now is for the market to get back to the key level that was identified on the higher time frames. And there you have it, a beautiful take profit. So this very, very simple trading. It can be applied to any strategy, but what you must make sure that you're doing is you're identifying your structure and how structure is behaving. Allow for structure to be broken first. You haven't missed a trade because you can always wait for the retest. Then when you go down to lower time frames, make sure that you're marking your ranges also, because if this level has been respected before, it's very likely that it'll be respected again. But from a behavioral perspective, if price breaks closes above this structure, then it's continuing to give us evidence that we need to support the higher time frame analysis. Once you have that information, you can then scale down to your entry time frame. You can look for those retests at those levels, and you can wait patiently for those patterns and jump into your trades. So I really hope that was useful. I know I speak a bit fast. If you need me to slow down, let me know. But remember, this business is about being patient. Once you can be patient and identify those trading opportunities, those momentum shifts and those behavioral changes, then that's when you're going to start to become consistent and profitable, not when you're trying to jump in too soon and too early. So as I always say, guys, if you enjoyed these videos, smash that like button, leave a comment below, let me know what your thoughts are on this, and until next time, take care.